Hey guys, welcome to the Legacy Podcast. Tim Bratz here, and today I'm sitting down with one of my favorite people in the entire world, Miss Kelli Garrett, who owns Rehab Wallet. She's a partner in Consistent Capital. She's got a new business called Aspire Lending, and not just in the lending business, but she's got a ton of business experience across the board in many different industries, and is a brilliant, brilliant business mind. And so I'm excited to sit down with Kelli. I always learn great things from her. I'm gonna pepper her with a lot of questions about how she scaled her business actively and passively. And I know she's gonna drop a ton of fire and a ton of gems for you. So let's go check it out and sit down with Kelli Garrett. Kelli Garrett.
Hey, man.
Welcome to the Legacy Podcast. So you've been on here, what, twice?
Yeah, this is third time.
But you're one of my favorite people to talk to. So we got to get you on more because you have so much of a pulse on what's going on in the marketplace on the real estate side. You're involved in all these different business ventures as well. And I think that's one of those things where you've done such a good job marketing yourself as the lender, the go-to, bridge lender and fix and flip lender for Rehab Wallet.
Right.
That I think people forget like how much business acumen you have. Not forget, but you know what I mean.
I get it.
Where they allocate you so much towards that, where like you fix and flip businesses too.
Right.
And you've done that over and over and over again. You've scaled dramatically. You've expanded out Rehab Wallet to have vertical integration on some long-term lending as well. And I know you're taking a look at different software platforms and all sorts of other different stuff. So I want to dive into all of that. So bring me up to speed. What's been going on in life and business over the course of the past 12 months since you were last on here?
Well, just like you said, as far as the lending piece, I've leaned in on that. You know, I've always said, I'm a businesswoman that owns a lending company. I'm not a true lender, like a lot of lenders are. There's a lot of people out there that are true lenders. I'm the complete opposite. I just happen to own a lending company. And so that was very, very, very intentional, what we've done at Rehab Wallet, to be out there with all our gear on 90% of the time, spreading the word, because somebody's got to do it, right? And so I've kind of utilized my previous life, which was, I flipped for almost 20 years. People forget that. That was, it was my life for a long time. Self-managing hundreds and hundreds of properties of our own. 2018 is when we kind of pivoted into this other passive world. But I have a whole other life of 20 years of that other world of flipping businesses, flipping houses, probably 40, 50 a year, to owning and self-managing our own properties and so forth. So this lending thing, this is important right here.
Thanks, buddy.
This is very important.
What happened in 2018 that, you do a lot of coaching, I do a lot of coaching, and I'm always trying to just like ask myself these questions of, what do I like doing? What do I not like doing?
100%.
What's making money? What's not making money? What do I need to pivot on? And maybe I jump too much, I don't know, but I think it definitely opens up a lot of doors. What was it that you stayed in the lane for 20 years, and then in 2018 there was just something clicked, and you're like, I want to move over to this more passive side?
It's no big light bulb, if you will. I think I just got wore out. I mean, to be honest with you, I'm pretty gritty. I mean, I kind of built my basketball life, my previous life of basketball, just being super gritty, and then I just took that into business, and it's tiring. I mean, it's super tiring. In addition to,
because you all got the pressure on you, right?
It is.
You got to make the final shot.
I do. It's very pressurizing, and I was great at it, I think, to a certain time, and I don't know what the light switch was, besides kind of layered on two things. One was I was just getting wore out of the day-to-day transactional piece, and the other was that I learned something else. I learned, once I got my head up and out of the weeds on a daily basis of just fighting fires, it felt like, there was another world out there of syndications, of great other operators that were doing this at a huge level, of an LP position. Hell, I didn't even know what that was in 2018, to a GP position. I didn't know any of that because my head was down in the weeds working. And maybe in 2018, that world was kind of coming around more. So knowledge, and then, I was probably, 18 so I was getting a little over 50 years old. I'm thinking, okay, part of my life, that's done. I've done okay. I learned how to, make net 7 figures in a year that way. And I thought, I just wanted to see what was else there, and was there something else a little bigger, because I didn't feel I had reached my potential just yet. You know, I always say this, and you know, Jed and I always kind of go back with this basketball stuff. So I can score a lot of points at a mid-major school. I mean, a lot of points. I've scored more points than any woman's ever scored there at the College of Charleston. I don't know what I could have scored at a Big Ten or SEC school, because I didn't play there. I didn't get a chance to play there, right? So I wanted to go play at a big school, meaning in business. I wanted to go play over there and see if I had that same potential that I had in the mid-major world, meaning, you know, flipping 30 homes a year, doing this kind of stuff. I just want to see what that other bigger school was like in business. And so literally, Sunshine and I, my wife, sat down and we really talked about it. We had about 350 properties of our own in our own portfolio. To stop flipping, to sell all those properties off. It took about a year to sell them off.
That's wild.
Create
That's a full-time job.
2 buckets of money. One bucket I was going to private lend. This was pre-Rehab Wallet. I was going to private lend out of this one bucket, because I had all the contacts. Those were all my guys. I mean, I had been in that world for so long. So I was private lending now to other flippers, and I took this other bucket of money, about $4 million, and I said, I'm going to go passively invest with operators that I know and trust. So I started I just say it, courting, dating other operators. Like, I did that with you, and I've been very transparent about that. I joined your mastermind to learn more about you before I go and take this bucket of money and go and invest with you. Did the same thing with Danny Randazzo and Dan Hamford at PassiveInvesting.com. And it's really been you guys that I've kind of went deep with. Maybe a few other ones the last couple of years that I know and trust. But that's kind of what happened in 2018. I don't know. It was time and knowledge that there was this other bigger school out here that I wanted to go try before I'm done, you know, in this world of journey of business life.
So what has been different? What, like, as you moved into the bigger school and started doing these bigger deals, what's kind of like surprised you? What did you like about it? What did you not like about it? What are some of those things that, as people are looking to scale, I think everybody thinks they want to scale. Everybody thinks they want to get bigger. I think sometimes it's easier to build a bigger business than it is a smaller business.
Doubt.
And at the same time, you're dealing with people who are sharks. Like, there's some really, really tough business people in that world. And it's not like you're the biggest fish in a small pond anymore. You know, you got to like kind of figure out who you are and where you position yourself in this world. So what was that like for you?
Well, I had been in control of my little bucket, right, for almost 20 years, doing it, you know, managing my little team of self-managing 350 projects and contractors and so forth. It was just Sunshine and I in a small little team. So I was in control. Then you take your hard-earned money of 20 years, plus I had been in corporate America for 12 years, so I had kind of had the 401ks and all that kind of stuff that I was really playing with now, and stock options that I had at UPS. And now I'm gonna turn this over to a 38-year-old and say, do good work, boy. You know, like, do good. And that's my heart. That was very hard for me.
Yeah, I bet.
So I took Sunshine and I both took time to really get to know those operators, to know that if crap hits the fan, what they're gonna do. Because obviously, you know, you're around life long enough, you know that not everybody's gonna do the right thing when it gets hard. And you know that is better probably than I do at this point. But I've been around the block a time or two to know that you huddle up, and those people that we're going to huddle up when time gets hard, those are the people that I'm going to surround myself with, and I'm going to take my bucket of money and be like, let's operate it with, be a good steward of my money, and I'll understand when time gets hard that we might not get a pref. I'll completely understand that because I know that time gets hard. But what are we going to do? Well, how are you going to handle that as an operator? So that was that on the passive side of real estate. You know, and then I got to do something with my hands, right? It's just, I always say that because I have tons of energy, thankfully. And so then I just kind of took what I used to do with my hands was go and property manage my own stuff and raise capital and do my own little thing. And now I said, hey, I'm going to open up another business and kind of like be my last hurrah and go big. I'm going to try to go big. And I need to surround myself and partner up with some big guys that can raise that much capital to go out and create Rehab Wallet. And so, I'm in the fourth quarter and we're going for it. And slow enough so that we don't have tons of problems, but fast enough to keep us all interested.
Yep.
So, that's kind of the way the kind of journey's been.
I love it. So from a standpoint of that growth, that scale, so tell me about where are you guys over the course of the past 3-4 years since launching Rehab Wallet? How many loans have you guys put out year over year?
Year over year, well, we're a total of, since inception, we're at 4 years and 6 months now. And we've done right at 1,780 loans. We've raised over $180 million, and we've put $350 million on the street.
So what was it in year one? What was it in year two? What was it in year three?
Year one, the first from June to December, it was 11 million. With our own, we didn't even raise capital until we had just a proof of concept.
Yep.
I've shared this before on our, I think this is just good for business, is that I need to see if the partners were going to dance together good before I start bringing in friends and family and colleagues money. It's just not what I was going to do. My last name means way too much, and theirs does too. So we danced for about 6 months together, be like, okay, we got something. Then goes 2021 to 2022, or that full year we did 50 million, right at 50 million, 51. And then third year was 96 million, and year four was 104 million, and we'll do 125 this year. So
it's awesome.
It hockey stick that first to second year.
Yep.
And we have a sweet spot of that sweet spot of 100 million, which is about 60 loans a month. We're real good right there. And I'm not in a hurry. I'm in no hurry.
So we got to there, and now, I mean, what's the goal? What's the goal over the course of the next, let's 3 to 5 years?
Yeah. Next year we're saying 150 million. It's hard as a salesperson because I think we're all wired as entrepreneurs as sales.
Try.
Let's go.
Let's go.
And you can't do that because I don't want a bunch of problems. I don't know and during these 4.5 years, we hadn't had a market. We might have had a soften in the last year and some change in residential.
Yep.
Commercial's a different story, but on the residential side, we softened a little bit, but it hasn't fallen off. And thank the Lord, it hasn't fallen off. So the market stayed up. I just want to make sure we have this foundation set.
Yep.
On the asset protection side. We were in a meeting yesterday from 9:30 to 4 o'clock, 100% asset protection. Your business runs through your culture of who you are, right? Mine does too. And mine is shoot the ball, offensive minded, and I have to really practice the other side of the court, being defense. I just have to practice it. And my team is very offensive minded, i.e., $350 million in 4 years and some change.
Yeah.
They just run hard. I've just noticed that I have to create this other defense side because that's when it'd be a pain in the ass. Remember how we've talked about like different projects that we're both in together? I'm with you on a few projects that just went south. You just wish you wouldn't have done them.
Yep.
Because it's not worth the time that kept you up at night.
I'm not making any money on this. It's taking all my time now.
Exactly.
Like, where could our energy and our resources be put better to
Exactly.
use
So why do we get in such a hurry? Why do we feel like we have to go shoot so hard, so fast?
Neither of us needed to do that deal, and somehow we got talked into it, and now it's been consuming our lives for 2 years. It's like, oh man.
Yeah.
So you're talking to somebody
Yep.
who is an active operator, active investor. What kind of advice would you give them? Let's say they're flipping some houses and they're looking to scale their portfolio, looking to scale. Like, what kind of advice would you tell somebody, hey, as you grow in your business, these are a couple things that you definitely want to look out for?
Yeah, I would say,
You've shared a lot of wisdom already.
Yeah, I was going to say, don't be in a hurry.
It.
Don't be in a hurry.
Yeah.
That's the thing. I think that we have borrowers right now. I think that's what we're talking about yesterday. Sometimes I'm talking about us as Rehab Wallet and the lender right now, we have to govern. We have to put a governor on them because they can't help themselves. They just can't help themselves. They see a deal, buy it. See a deal, buy it. And all of a sudden, are they good enough businessmen or women to handle 10 projects at a time? That is difficult.
Right.
So I would say, don't get in a big hurry. set your goals. This is what we always talk about when I did coach for so long is if you want to make $100,000 in a year and you can flip properties and make 30 a clip, you just got to do three deals this year.
That's it.
Okay? Add a zero to it if you want to make $1 million. Want to make $1 million, you got to do 30. You do 30 divided by 12, and you got to do 2 and some change a month.
Yep.
Don't overcomplicate it, and just work the plan. And be able to say no. Sometimes the things that I've said no to are the best decisions I've ever made.
Yep.
And I don't know why we don't learn that when we're starting out, right? I think you just got to get beat up. Life makes us just get beat up, throat punched, and then you're like, oh, I'm so smart now. But if we would just...
And people like you and me, we'll hear that on a podcast and be like, yeah, I won't do that. And then we do it anyways, right? Because there's some things you just have to go through the process and live it in order to really learn it.
Absolutely.
Then there's other things that you can learn from what people are saying, but that's one of those things. When you're a hard charger and offensive minded like you and I are, unfortunately, you just got to learn. You got to get slapped in the face a couple times.
You do. And, and then your spouse is very important. I wish I had listened to her years ago. I've always had my foot on the gas and hers on the brake up until 2018. That's what it was like. And when I agreed to get on the same page about like, okay, I don't need to be so a freak about going so fast.
Yep.
And obviously we have to do some deals to make a living because she would never do one deal. So we got to have a happy medium between both. I just didn't listen to her. Honestly, I just said, I didn't listen to her. And, bit me in the butt.
Has the relationship been better?
1,000 times better.
Yeah.
1,000 times better because of
amazing?
It is. And,
I can see me and Kate are similar. She's very conservative. I'm very aggressive. And she's like, let's hang out. Let's do this. Let's do I'm like, we got to go. I got calls to make. I got deals to do. And like over the past 12, 24 months, I've been trying to scale back, especially since Annabelle's been born. Trying to scale back, see through the deals that we have, try to clear the plate a little bit. And the relationship has gotten way better, like dramatically.
It is. And your life's better. You sleep better. It is amazing. And sometimes we just got to be pulled back. There's nothing wrong. I've discussed this with her and other people. Like, I don't want to change who I am. But sometimes, you got to be checked and be okay with that. And so I would say, going back to that advice would be
That's great advice.
to find somebody that is just opposite than you and let them check you. We get accountability coaches and we're talking about working out earlier, workout partners and all that kind of stuff, but we don't get any like person to check us in business sometimes.
Have you ever run like a DISC assessment on your whole team?
I have it on my whole team.
Or have you and Sunshine both done
Absolutely.
a DISC? Yep.
And we did something, I think, at a mastermind with you.
The PI index.
The PI, yeah.
And so there's all these behavioral tests out there, and that'll like, yep, that's exactly who you are. That's exactly who I am. And it was open. Like the simplest one for me, the first one that I ever learned was DISC, D-I-S-C, and anybody can go and search this and find a free test that takes 10 minutes to do, and you do it. Have your team do it. Have your business partner do it. Have your spouse do it, and you really start to understand where people are. D is like a big driver and kind of bullish and will run someone over. They care very little about feelings and more about results. That like, let's get stuff done. I is very interpersonal. They like to have a good time and hang out with other people. They care a little bit less. I mean, probably salespeople are a lot of I's, building relationships, but sometimes they can get lost in party mode or something and not really focus on more business and getting stuff done. S is more supportive, and these are like your teachers and your nurses and your executive assistants, people who just care more about helping than they do about lighting the world on fire, making the most money. It's just like, I want to support, I want to be thanked. And then C's are very like conscientious. These are like the analytical types, the accountants and the engineers and the spreadsheet analysis folks. And so I'm high DI. And then Kate is high SC. She was a nurse and an accountant, right? And I'm a CEO and a sales marketing guy, right?
Yep.
Like completely opposite.
Completely.
But to your point, we check each other.
Yep.
All right. I pull her out of her comfort zone a little bit. She pulls me back and gets me in the right frame of mind. And to your point, like the spouse usually has the best judge of character about a person too,
Right.
right?
And they care about you the most.
Exactly. That's a good point.
The most.
And you think they're trying to drag you down or like
Right.
hold you back, and it's like, no, it's because they care so much that they're having those comments.
Absolutely. Absolutely.
I think it's great insight. So that's a active operator. Tell me about the passive investor. Tell me about if somebody's in this, man, I'm tired, right? I've been running hard. I've been working my tail off. Now I'm sitting on some cash, sitting on some capital. I want to kind of pivot over into this more passive mode. What are the most important things to really look at when they're looking at deals, when they're looking at operators? What are a couple pieces of advice that you could say, hey, make sure you're checking these couple of boxes before you start deploying money?
Well, I'm just going to put the operator at just number one with 14 exclamation marks behind it. The operator is the number one thing because they would not have even bought the asset unless it was a good deal. So I'm going to say operator number one. Now the specifics of the operator, I think that has to have a team because I always think about this, and maybe again, as you gotten older, things just come just natural, like duh, that people do that. You know, maybe I've had more deaths in my family recently because I'm getting older, they're getting older. So people die. I had a borrower had a little, I don't remember exactly the amount that he has with us, but about 10 loans with us, took his life. Yeah, you don't know what happens when you start doing things, right? Just recently. This was like 3 weeks ago. So,
oh man.
So my point with that is, what happens if you're the borrower? Something happens to the operator.
Yep.
Like if I'm going down, just going deep with you inside your business as an LP investor, and something happens to Tim Bratz,
yep.
Can his team carry the load? So I think about that a lot.
I don't think you've ever asked me this question, but it's probably come up in conversation. But if anything ever did happen to me, I have the entire estate all set up. Team runs. We have a board of directors then that would run the company, including Matt Carlin, including Fatty Bomitri, including my CPA, including my attorney, and my dad as another. So there's a board of 5 people that keep the train on the tracks. If anything ever happens.
That's great information, and a lot of.
And I don't think anybody ever asks that question.
They don't. I just see that you had the team and not just the number of people underneath you. It's not the point. It's the point of the character of the men and women that are underneath you. So
Agreed.
that's the big deal, that they would take care of your estate and the deals that you have with other LP investors, okay? Just like, let's go back to this borrower that passed of ours at Rehab Wallet. His wife, now that she's got her feet settled, she's a rock star. She's had been in the business with him, and their project managers and stuff, they're taking care of everything. We gave her a deferment of 2 months to breathe. Go breathe. I know that this is so difficult for you. She's a rock star, very communicative, we're going to take care of this. We got you, no problems. Whatever. My point was that her team, his team, which is his wife and other project managers underneath them, are taking care of Rehab Wallet's funds.
Wow.
Right? Over here as an LP investor, same thing. What happened? So I would just say the operator's the number one thing. The asset is important. It's down the line, to be honest with you.
How would you underwrite or really put an operator to the test? So you're looking for a team. That's one thing. Obviously, character, right? Are they going to do the right thing? But I think a lot of people talk a good game, and then what happens when things get tough? What happens, like, you and I got to know each other through being in circles in Charleston, through you coming out to legacy family events, and maybe you're peppering me with questions that I didn't realize you were peppering me with at the time, but probably asking me those situations. And then obviously we've been at a couple of deals that have not gone the way that we hoped it would go. And like, you came into that deal, the Texas deal, through somebody else, and then I was involved in it, and I'm taking care of you even though I didn't bring you into that deal, right? So. But you don't know that from the get-go.
No.
Right? And so.
No, I didn't know that. I didn't know
that
that about that deal, and you won't know. I don't know if you'll really know. Now, what I did prior to being an LP investor, I sat and watched. I joined your mastermind. Watch you on Facebook. I watch you. I watch. I just watch. And I don't know if you can tell that much character about that, but I think you can. And then you go spend time with that person.
Yep.
Before you took care of me on that deal, you took care of me on something else. I can't even remember the
Yeah,
deal. I
either.
remember it went south and you still paid 10% interest on the money or something. I can't even remember. You know probably the name
Oh,
of
that's
it.
probably,
It was like 600.
Yeah. Was that the Albany 492? Is that what that one was?
Again,
don't
I can't remember asset last
Yeah.
or second or third, operator first.
Yeah.
You did the right thing. I think you had to bring a check to closing, if
Yeah.
I can remember correctly.
Yeah, it was almost
and you
$2 million
had borrowed. Yep, you had borrowed. I think it was 600, and you said, and I remember. And next thing I know, I've got 660 back.
Oh, that's right. I know. Do
you remember it?
Yep.
Okay.
It was supposed to sell for more. The seller or the buyer sandbagged us at the closing table, and the equity wasn't as much as it should have been. And so I made sure that in 6 months or whatever, it was just a short term. That's
exactly.
Right.
So I mean, then comes another deal that might come up. We were talking about a deal today. I mean, I'll come in with you just because you did the right thing on that specific deal. But how would I know that Tim would have done that? I don't know that. I think that you just got to, instead of going so wide as an LP investor with 15 people, you can go deep with 2.
I agree.
Or 3. Now I probably am saying 3 because, and I'm going to bring Chris Cates into it, is that he's been a wonderful, and they're in my backyard. I kind of start, if Chris has gotten his feet kind of just now getting it wet, I know his character. I coached him for 3 years. I've watched him. I've studied him. I'm going a little deep with him. But he's in my backyard.
Yep.
Okay? Because he's kind of new in the development industry. So he's in my backyard. I know it. I know Park Circle where he's at. I know Johns Island where he's at. So I probably, if he was in Ohio or another state, I might not have went this deep with him, right?
Yep.
So just be very methodical with this. I worked really hard for this money. And, I know things are going to go wrong, but I just think you've got to sit and figure things out and really get to know somebody. And joining your mastermind was a big deal.
Yep.
A lot of people that rotate around you have character, and usually we all do have the same cloth, and people follow you because of who you are.
No, I agree, and I appreciate that. And I think it's one of those things where, looking back, I've sponsored loans and brought money to a lot of people's deals. That's how we built, right? That's how Commercial Empire got built. That's how Legacy Family got built, was like, I'll help you scaling your rental portfolio. And I think initially that was a good theme. Now we're not joint venturing anymore because what we found was there's people who have means, but not good intentions, or they're not good character, is what I would say. And then there's people with good character, but maybe don't have the resources and the team and the access to, these people, they might be good people, but they've always had a spotter, right, at the gym.
That's right.
And now all of a sudden the spotter went away and they can't lift the weights if things got tough. They have every good intention, they want to do the right thing, but they're just not producers. And then there's people with money who are just bad guys. And even though they have it, they're not willing to help, they're not willing to support, and it's kind of too bad, too sad. And so I think, as I've reflected, I'm like, I need people who are good people, good character, good value, to all your points. And you kind of alluded to this, but they have enough experience that they built the muscle that when things get difficult, they can still see the deal through. And you kind of hit on that through the team, right?
Yep.
Having a team. And so we're saying the same thing. And
the raising
I think
capital
those are
piece
good
of that,
parts.
like you said, the guys who have good standards and so forth, in addition to also they can raise the capital to wait, because
Huge factor.
it's like a lot of deals on the commercial side. Again, business-wise, we own Rehab Wallet, Consistent Capital, and soon to be Aspire Finance, which we can talk about in a second. As a businesswoman, personally, in our personal life, we're an LP and a GP investor with a few operators. With that specifics, it's like the operators that we're with, which is only 3, might not be able to pay pref right now, and I'm okay with that. But have been able to, for the last 2 years, as we just got throat punched in the commercial world. And these rates, you're able to raise money to wait till we can refinance to get out. That's the thing, is to raise the capital or do a promissory note or something. Not everybody can raise capital. I thought a lot of people could, but people can't.
Nope. And that is one of those skill sets. I mean, you've always said it. It's a secret sauce to doing business. And to your point, guess what? Everybody who's been in the market, everybody who's been in business realizes everything's cyclical. Everything comes and goes and ebbs and flows and ups and downs. And if you have the ability to raise money, then you can just ride out the cycle until it comes back up. You don't have to sell at the loss. You don't have to, make bad short-term decisions or bad long-term decisions based on short-term circumstances. You can just ride it out a little bit. And if somebody can't raise money,
you can't ride it out.
That deal's gone.
Can't ride it
Everybody's
out.
losing their money. And I think that can be a tricky bag sometimes too, because you don't want to put good money into a bad deal, but at the same time, we're in mostly good deals, right? We're in you've underwritten the deal, you've reviewed the deal, you know what you're looking at, and you know it's got meat on the bone. It's just over the past 2 years, I just saw somebody post about this, and it's such an eye-opening revelation is, in 2008 to 2010, the market in residential real estate dropped by, on average, 25%, right? All values across the country, on average, dropped by 25%. That same thing, it has dropped in commercial real estate over the past 2 years between interest rates and insurance costs, cost of labor, cost of material, by about 20 to 30%, depending on the market and where you're at. That means we have gone through the great financial recession of 2008 that residential saw. We've dealt with that over the past 2 years
Absolutely.
in commercial real estate.
Absolutely.
And I'm like, wow, they're right, because all values have gone down by 20 to 30%. And it's like, all right, now what do we do? If you've been able to sustain over the past couple of years, then, I think you're going to be pretty strong coming out of this whole thing.
And the way you've been able to sustain over these last couple of years is that you've had to raise capital to make up the difference. Stop the pref and being able to raise capital or have a capital call of some sort, whatever you want to call it.
Yep.
I know some of the other group that I'm in just had a capital call on a beautiful building, 93%, so 300 unit, and actually in West Asheville, Beast Ferry. Beautiful building, just got to wait and get through it,
Yep.
right? Because on the other side of this 14 months or whatever that we just got to maybe wait, maybe not even 14. I don't know how much longer we got to wait. We'll refinance and be able to sell it and get out of that. But who can wait? And who can sustain? And those that can raise capital or have investors that okay with the capital call. And if not, you just got to get through it.
I think there's something to be said about, just like as a lender, you vet borrowers, right? I'm getting to a point where I'm kind of vetting my lenders, and I prefer to do deals with people like you who get it, who've been around the block, who understand that it makes life easier when I can have a one-on-one conversation with my lender and just say, hey, here's what's going on. We're going to pause it for 90 days and then get the pref going again. We don't want to increase the cost basis and this and that. And there's a lot of moving parts, and people like. Someone like you really gets that and really understands that, and it just makes it way easier. But that's because we've had that relationship over the past 5+ years that we've been doing stuff together. So that's amazing. So much good stuff in this commentary. I'd love to understand what's the next thing, right? Okay. You had talked about the new lending arm you're extending.
We're going
Do we want
deeper.
to talk about that?
Yeah, just a little bit. We we're going deeper with short-term, obviously, is Rehab Wallet. Longer term is Consistent Capital. We got Whit McCarthy is the Kelli of Rehab Wallet. Whit is that of Consistent Capital.
We couldn't say enough good things about Whit before we started filming.
Love him to
He's
death.
a phenomenal person, and he runs the long-term, both DSCR lending. He's done loans for me before, and has done a phenomenal job. Just white glove service across the board. Great rates, great terms.
New construction,
and
ground up DSCR is kind of like our. That's our two products over there.
Where Rehab Wallet's more 6 to 12 months.
Yep.
Right.
Yep. And then the last 2 months through your mastermind, met Tim Olson, and now he
really good guy.
We're doing equipment financing, and the branding name there is Aspire Finance. So Tim's running that. Aspire.
Love it.
And so, again, a business leg, that's the business leg of our business, right? Is that I'm more of the active piece inside Rehab Wallet. I'm a support piece of Consistent Capital, but Consistent gets business from Rehab Wallet. We're constantly sending over. That's why we started Consistent Capital, was to get some of these DSCR loans off our books off the short-term book so that we can turn around and have the velocity of money and make more money on our money over here at Rehab Wallet, go over here and keep it kind of within our arm. And then the equipment financing, again, going back to being an LP investor, same thing we did too, with Tim was just sit back and watch. What an amazing character. Calls me one day after a mastermind and just says, hey, talk to me about a debt fund and how'd you get started and so forth. And before I know it, I'm like, dude, we can raise money for you. If you're going out on your own, we can raise money for you. Let's just partner up and do this.
Love it.
So the same partners that are in each leg are the same partners all the way through. And it'll just a lot of synergy between Rehab Wallet and Consistent, not as much with equipment financing because it's kind of its own little beast, but lots of relationships will just continue to flow through the whole entity.
I love it. I love it. I mean, you have so much business acumen across the board. Obviously, there's a lot. Like, this is the business that you're in right now, which is the lending business.
Yep.
But being in business for 30 plus years and seeing, I mean, you came from the corporate world of seeing logistics and a lot of big billion dollar business stuff into small business and then everything in between. It's a pretty cool position that you're in now where you can kind of be selective. Here's the business that I want to move forward on. And I'm going to get equity in a deal because of the consulting and the value that I can bring that has taken you 30, 35 years to build up. Somebody's like, well, why should I give up that much equity? Why should I do this or why should I partner? Because I can help you get there like this, right?
Exactly.
And I think you've done a brilliant job of not necessarily positioning yourself, but
kind of
positioning yourself and being selective of the businesses that you want to do.
Well, it's kind of like I know what I'm good at.
Utilizing your resources the
exactly.
right way.
I know what I'm good at and what I'm not good at, and I want to team up with somebody and have partners that I know that I could put the money on the street at Rehab Wallet. I had not had experience of raising that much capital in my life. They can raise capital. Dan and Danny can raise capital at passiveinvesting.com. I knew I could put it on the street. So I wanted to team up with somebody like that. And then lastly, I have to say, there's a big team behind us. There's no way that I could do any of this without my COO, without Angela's. She's a rock star. She's the female version of Scott Hannes. And the more I'm around them, they really are. And
you imagine the two of them just sitting at a table, just rapping?
Just seriously, it's love. It's all it is a big heart. It's a big heart at that table. They just love humans.
The two kindest people.
Oh my God. And so, and then we've just recruited a lot of talent just to follow us. And I've learned that the bigger the business is, the better the employee is, meaning the 9 out of 10 is going to follow a bigger business because we can keep them interested. And it's been able to recruit a lot easier in a big business than a smaller business.
I love it. I love it. Well, I'll tell you what, it's an honor to have you back. It's an honor for us to be friends. I love you to death. And I don't know if you know this, but we have conversations about how do we do more with Kelli? We love Kelli. How do we do more with her? How do we support each other more? And you guys are going to be seeing a lot more of Kelli Garrett through Commercial Empire. We got the Commercial Empire coming up.
Yeah, that's exciting.
We haven't done it in almost a year and a half.
Okay.
And so
what a great place for somebody that just now getting into commercial real estate. If you don't tap into Commercial Empire, I don't even know what it costs. Doesn't matter what it costs. And I think we're going 2 days. You think you're going to do 2 days instead of 3 days, right?
Yep.
And so if you don't tap into that and we're wanting to get started, you're crazy. It just doesn't get any better. And I'm not just saying that because we're sitting here. I mean it. It's because everybody wants to go. Back in the day, we had access to a book. That's it. Commercial Investing 101, and you go to Barnes & Noble and you read. And nowadays, you can find it on YouTube, but why not? You're having the caliber of people at Commercial Empire teaching this product and how you guys have maybe messed up a little bit. You've won and you've lost and sharing your failures and how to jump over those failures. Why not join it? It's just crazy. When is it again?
January 16, 17? Yeah, 2 days virtually.
Perfect. Starting the year off?
Yeah, starting the year off, getting everybody excited. We'll be hitting very heavily. I know a lot of people have been out to Commercial Empire. We have had thousands and thousands of people that have come through, but this is going to be all about 2025, right?
Good.
How to find deals in 2025, how to raise capital in 2025, what the lender environment is doing, creative financing, operations, new technology, how to implement AI into operations and be more efficient, be more effective with running your businesses. So it's all about how are things different and how are we doing deals right now with all the changes that have happened and what are the tax implications and tax cuts and depreciation and all that kind of stuff. So we're really, really fired up about it. I'm excited to have you there.
Absolutely. I'll be there.
Awesome. Well, I love you.
Thank you.
Thank
Love
you
you
for
too,
being
buddy.
here.
Love you too.
Hey, appreciate you guys being here. We are here every Sunday on the Legacy Podcast. Make sure you're here next week. And if you would, please like the video, please subscribe to our channel, and share this with somebody who's looking to scale either as an active operator or looking to do some passive lending, because Kelli dropped some absolute fire gems of information during this podcast episode. And obviously there's a lot of brilliance from her and from her experience. So share it with somebody who needs it. Share it with somebody who could use that insight. And until next week, I'll see you guys on the Legacy Podcast.